Welcome to our latest market update. Today, we're diving into the story of Novo Nordisk, a global leader in diabetes and obesity care that's making headlines with a remarkable dividend announcement and impressive quarterly results. From delivering a striking 240% dividend yield to showcasing strong earnings performance, Novo Nordisk is sending a clear message about its financial strength and commitment to shareholder value. Let's explore the details behind this big move and what it could mean for investors. This content is for informational purposes only and is not intended as financial advice. Always do your own research or consult a financial advisor before investing. Novo Nordisk has officially announced a semi-annual dividend payout of 41 cents per share, with the ex-dividend date set for August 18th. This latest move represents an eye-catching dividend yield of 240%, which is well above average and signals a strong commitment to rewarding shareholders. The company's dividend payout ratio currently stands at 48.5%, indicating that its profits comfortably cover the dividend distribution. Analysts expect this coverage to continue in the upcoming fiscal year, providing stability for income-seeking investors. On August 7th, the stock price of Novo Nordisk surged 7.5%, closing the trading day at $48.76. This gain followed the release of the company's latest quarterly results, in which earnings per share (EPS) came in at 97 cents, surpassing Wall Street's expectations of 93 cents. Detailed dividend announcement. According to the Wall Street Journal, Novo Nordisk's semi-annual dividend will be distributed to shareholders of record on Monday, August 18th, with the payment date set for Tuesday, August 26th. The declared amount of $0.4119 per share not only reflects the company's robust financial health, but also highlights its strategy of consistent shareholder returns. Importantly, the firm's dividend payout ratio of 48.5% leaves sufficient room for reinvestment in operations and growth. Looking ahead, analysts project Novo Nordisk to earn approximately $4.66 per share next year. This projection would keep the anticipated future payout ratio near 49.1%, which is a sustainable level that supports both investor payouts and corporate expansion. Stock market performance and financial ratios. On the day of the announcement, NYSE nvos shares rose by $3.38, settling at $48.76. The trading volume spiked dramatically to 40,366,461 shares, far above the stock's average daily volume of 11,252,460 shares. Despite the recent jump, the stock is still trading below its moving averages, with a 50-day average price of $67.96 and a 200-day average price of $72.01. Novo Nordisk now commands a market capitalization of $217.73 billion. Its price-to-earnings PE ratio stands at 14.43, while its PE to growth PEG ratio is 1.43, suggesting reasonable valuation compared to its growth prospects. The company's beta of 0.63 points to lower volatility than the broader market. In terms of liquidity, Novo Nordisk has a quick ratio of 0.56 and a current ratio of 0.74, alongside a debt-to-equity ratio of 0.70. Over the last 12 months, the share price has ranged from a low of $45.05 to a high of $139.74. Quarterly earnings recap. In its latest quarterly report released on August 6th, Novo Nordisk posted EPS of 97 cents, exceeding analysts' estimates by 4 cents. The company's return on equity stood at an impressive 80.94%, reflecting exceptional efficiency in generating profits from shareholder capital. Its net margin came in at 34.52%, indicating strong profitability. Quarterly revenue reached $11.69 billion, surpassing expectations. However, some analyst figures showed an unusually high consensus estimate of $77.51 billion, likely due to reporting inconsistencies or currency conversion factors. Analysts as a group expect the company to post full-year EPS of 3.84 for the current fiscal year. Shifts in analyst ratings. Recent weeks have seen notable changes in analyst sentiment toward Novo Nordisk. On Tuesday, UBS Group downgraded the stock from a buy to a neutral rating. Similarly, Wall Street Zen revised its rating from buy to hold on August 2nd. Earlier in the year, on April 15th, BNP Paribas began coverage of the stock with an underperform rating. Barclays reaffirmed an equal weight rating on July 30th, and HSBC also downgraded from buy to hold on July 31st, assigning a price target of $57. Currently, based on MarketBeat.com data, 2 analysts have issued sell ratings, 10 have given hold ratings, and only 2 recommend buying the stock. This results in an overall consensus rating of hold and an average price target of $93.67. Company overview. Novo Nordisk, together with its subsidiaries, is engaged in the research, development, manufacturing, and distribution of pharmaceutical products worldwide. The company operates in 2 primary segments: diabetes and obesity care, and rare disease. Its products are marketed across Europe, the Middle East, Africa, mainland China, Hong Kong, Taiwan, North America, and other global regions. With decades of expertise in chronic disease treatments, particularly in diabetes care, Novo Nordisk has established itself as a leader in innovation and patient outcomes. The company's strong dividend policy, robust financial metrics, and consistent earnings growth continue to attract long-term investors, even as short-term analyst ratings show a more cautious stance. Thank you for watching. If you value thoughtful, data-driven market analysis, be sure to subscribe and follow along for more strategic insights. Have a company or sector you'd like us to explore next? Leave your thoughts in the comments. Until next time, stay informed, think long-term, and invest with purpose.